Morning and welcome, Patriot Radio News Hour. Joe and Jason wrapping up the week. Happy Friday, right? It's the best day of the week. Our toll-free number, 800-951-0592. The website, you know the website, allamericangold.com. We always have articles, videos, 90% of it, maybe 95% of it. We don't even talk about, the show, it's only an hour. And really, with commercials and everything else, it's like 45 minutes. You can't get it all in. A lot of great information out there. Another good video out there today talking about what the banks, and of course we're talking the major banks, what they've been talking about as far as the central bank digital currency, the head of the IMF, as long as they don't tell you about it, right? Then you don't, you can pretend it's not happening. Was out saying, oh yeah, central bank digital currencies absolutely is going to replace cash. Of course it is. I mean, why else would we go through all of this stuff if that wasn't the case? And it's going to be so much better. But check out the video at allamericangold.com because it's a little different. And when you're talking about the major financial institutions, they're all preparing as well, Jason. And the talk of it is hey, within the next 5 years at the most, before we really see central bank digital currencies globally and more countries continue to get ready, continue to prepare. We already, we're way past the testing point, right? Behind the scenes, we're already using a central bank digital currency at like a clearinghouse for country-to-country trades and all of these things. But now, even the financial institutions, right, Jason, everybody is getting ready, which means all of us need to be ready.
Yeah, that's right, Joe. And a lot of your checking and savings accounts that you use every day may already be signed up to FedCoin. It's just not. It just doesn't say it out loud. So gradually, without you knowing it, you'll be added. Now we saw cash, so it's not a digital currency only society. But the first thing they got to do is get everybody, as many people as they can, into the FedCoin digital currency first, and then they can see about completely eliminating cash at some point in the later future, Joe. And that's when things are really going wacky.
Yeah, and I think here at home, of course, they're going to tell you, oh yes, we're going to have all of these things set up for privacy. Don't worry. I mean, it'll be private as long as you understand we know everything you're doing. But other than that, it'll be private. Right up until we need it not to be private, but it'll be private until then. As long as you're a good human being and you've got a good social credit score and you don't have a big carbon footprint, right, then it'll be private, for all practical purposes. I mean, don't worry that we're going to know everything because, we'll make sure. We'll put the safety walls in, right? We know how that works. The safety walls are there until the government no longer wants them there. But again, it'll be a crisis. And everybody's trying to put a watch to it, right? Well, how soon? Is it 2025? Is it 2026, 2027? The funny part is all the clocks I see are all saying before 2030, right? Hey, I don't know when, right? It's not a question of if, it's just a question of when. And when we talk about cash, everybody better understand. I don't think it's going to be, hey, you have to turn your cash in. I think it's going to more, because I always thought that, right? Hey, they're not done. They're going to need the money because the crisis is going to come. I keep telling you, please, 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 please don't have excess money in your bank account. You're just asking them to take it. Seriously. You're telling the government, you know what, I know. I've been watching. I see what's happening. I know what Dodd-Frank really said. I know that's bail in, not bail out. I know that there's been trouble in the debt markets and banks have all these hundreds of billions of dollars of unrealized losses. By the way, the new number, almost $700 billion of unrealized losses. Shh, it's okay. It's okay. I mean, the FDIC's got a whole $100 billion. It'll be fine. Don't worry. I'm going to tell you. Don't have it in there. Because if you do, they are going to, they're not going to take it. Nah. According to the way they wrote the rules, they're just going to borrow it. See, that'll be better. We're just going to borrow it for a little while. Don't worry. Maybe later we'll let you know down the road. And, oh, by the way, don't worry about cash. Because I was like, okay, at this point they're going to make you bring all your cash in, right, so they can borrow more money. That's kind of what my thought process was. Nah. Just won't be able to use it. Right? You won't be able to use it. And once you figure out, man, I can't use it, man, I want to go to the bank now and put it in there. Why do I have this feeling there's going to be a surrender rule of some sort? Well, you show up to the bank with more than $10,000 in cash, and remember, they're going to count you. It's not like, I'll show up with $1,000 today, $1,000 tomorrow. No, I'll tell you how it's going to work when we get back. (800) 951-0592. Joe and Jason, Patriot Radio News Hour here on this Friday. Quick look at the markets. The Dow is down, not a lot. The Dow, the S&P, the NASDAQ, they're all lower today. Gold's higher again. Gold, right next to $1,990 this morning. Silver down a little bit, not a lot. About 10 cents right now, 23.85. And as you're watching all of this play out, right, because we've been talking, man, what a weird market. How about the Treasury market? Let's look in at that bond market. A little higher today, 446. But this is the quietest day, and the day's not over. But this is the quietest day so far. This huge volatility in the debt markets. We're going to talk about that today. Ray Dalio was out talking about it. And remember, yesterday we got, man, something isn't right. Just don't quite know exactly what it is, but I've got a pretty good idea. We're talking about being diversified here. I think, Wall Street, when you look at, hey, who's going to have the toughest time? Let's just take the next 5 years. Okay, let's go out. The analysts that were saying, hey, the banks are saying central bank digital currency in the next 3 to 5 years. Retail central bank digital currency, 3 to 5 years. Well, having something that isn't correlated to the stock market that can get you 10.25% return per year fixed, you don't have to worry about it. I mean, hey, 5 years from now, if things look better, okay, maybe you want to do something else, or maybe you're just like, man, I'll take 10.25% from now until the day I die. Check out investyrefi.com. That's the word invest, the letter Y, REFY.com. Or just make it easy. Just call them. 888-YREFI24. Remember, you got to have a minimum of $50,000. You can use an existing IRA. Some of you can use your 401k. Check them out. Just telling you. But before the break, we were talking about, okay, what's going to happen? We're not getting out of this. I know, right? The Goldilocks, right? Maybe, the mythical unicorn for the first time. Here's what you need to believe right now. For the first time ever in the history of central banking, By the way, central bank's been around a long time. Way before we were a country. They've never been able to do what they're claiming they're going to hopefully do this time. Well, man, we created inflation. We printed the dog snot out of cash and money. And now, somehow, we're going to end inflation and everything's going to be okay. Right? There's no price to be paid. No price to be paid for adding $30 trillion to the debt in the process. No, nothing. Nobody's going to have to pay. Come on. You're not that naive. It's not going to happen. They know it's not going to. They just won't want you to know. Because the last thing they want, right, is people to continue. By the way, people continue to take money. And you know what? Somebody's listening. Money keeps leaving these banks. Most of them are just, these guys I know, they're going to money market thinking they're going to be safe there. You're not safe there, but that's okay. It's better than the bank. Well, it depends. If you put it in the bank's money market, you're no better off, but that's a different show. By the way, the emergency lending program that they never talk about ever, another all-time record. It's okay. I mean, what could possibly go? That just tells, right, things are getting better, right? Must be, right? They keep borrowing more money. Yeah, okay. That means it's not better. But let's talk about cash for a minute. Because remember, I was saying, man, I thought they'd give you like an end date, right? Hey, if you turn it in before this date, we'll give you full value, right? And then if you turn it in, a year later, we'll give you 70%, and 5 years, 50%, something like to kind of incentivize you to turn it in. They're not doing it. Nah. I think they're going to do the opposite. They're going to go to that digital currency, and you'll see it. It'll be slow at first, a little drip, but one by one. Nobody's going to take cash anymore. Nobody. Look at it in Australia. Australia, the 4 largest banks, started in January. 2 of them, you're not even allowed to bring cash into them. Yeah, no, you can't do it. I want to take cash out. No. The other ones, well, you can, but you got to go to the special branch. Right? Oh, well, now you can't put, you want to put cash, you can't put cash in here at this branch. No, you got to drive 25 miles to the special branch. Yeah, you can do it there. Here's what I think is going to happen. And Jason, I want to get your opinion on this. Why do I get the feeling that as people realize, crap, nobody will take my money? Obviously, what does it mean? Well, it's no good. If no one's going to take it, it's not worth anything. Well, you know what? Guess I'm going to turn it into the bank. And I don't know what the number's going to be. I'm going to go with $600 because that seems to be, when you think about Venmo and PayPal and all, right? Anything over $600, you got to get $10.99. I was hoping 10,000 would be the number. It ain't going to be that much, right? Why do I have the feeling you're going to go in there and the bank's going to be like, oh, yeah, sure. But here's how this works. We'll take the first $600 or maybe the first $10,000. I don't know. Probably $600. But the rest of it, let's just say you came in with $5,000. All right, well, we're going to put $600 in your account. So that leaves you with about $4,400. Why do I get a feeling there's going to be a surrender charge? Tell you what we're going to do. We're going to give you $3,000 more in credit. But this other $1,400, that's going to be sitting on the side unless you can prove to us how you acquired all of this money. It's going to be a surrender tax because, well, we don't want to call you a thief. We don't want to say you're a criminal. And let's face it, you really don't want the IRS digging in because we didn't hire all these 70,000 people because, we wanted better customer service, like Janet Yellen will tell you. But, Jason, I think that's going to be it. I think they feel like they're going to get a lot more surrender cash that way than any other way.
Yeah, I think it's going to be like your Coinstar machines, Joe. It's just going to be a fee, coming in, coming out. And here's the thing: there's a piece of me that thinks cash is not going to go away because let's just say there's too many, I guess, what you'd call legit criminal enterprises that work with the government, that they need their privacy in some level. Can you imagine the government doing their dirty deeds with a digital stamp on it? I mean, I guess I saw it's not impossible, but I get the feeling it's just going to be very expensive. Everyone will get the picture that, hey, not only is it inconvenient and slow, but hey, 10% or 8%, whatever, it's going to be some amount that if you put it in, the bank takes it. If you pull it out, the bank takes it. How much freedom can you afford? Well, if you want to transfer money privately, 16%, 8 on the in, 8 on the out, something like that, Joe. That's what I think. I think it just seems to me there's got to be a reason that the federal government's going to want a little cash out there so they can drop a pallet off in Iraq sometime, right? I just get the feeling
dropping a pallet off in Iraq doesn't affect what's going to happen here in America. But again, I don't know. We'll see. Something's not right. And when we start looking at, and we've been talking about what's been happening at these Treasury auctions, and it's not good. And it's consistent. Every quarter, seems like there's just a little less people there. Well, less bids. Right? Yep. So think about the government's got to auction off, and pick a number. We got to auction off $50 billion of 5-year notes today. Well, normally the government would love to get $150 billion worth of bids. And, of course, what they would really like is people that would bid less than the going interest rate, right? Because how it works, it's all blind. So the government does its blind auctions. You submit how much you want to buy and how much interest the government has to pay you. And then the government picks, obviously, the least amounts till they fill the order. Well, here's what's been happening. In the past, they'd get $150 billion for the $50 billion. Right? 3-1. Sometimes 4-1. And all of it, enough of it would be at or right below or right above where the current rate was. Perfect. Right? And let's just say, for argument's sake, that a 5-year note's at 5% today. And they would get they would have the $50 billion filled right near 5%. Say from 495 to 505, it's all filled. Nobody even cares about the rest. Today, they're barely getting $100 billion worth of bids. And a couple of times, it's gotten real close to where they haven't even gotten that much. But here's the problem. They're not getting bids for under the going rate. And to fill the $50 billion, so, a good auction, 3-4 times oversubscribed, within 1/10 of a point either way. 495 to 505, it's all sold. Now they're going, we got some 505, 51, 52, 525 before finally it gets sold. And here's the problem. Who are they selling it at the 525 for? the banks running the auctions. Because they're like, man, we got to step in, right? They're like, okay, we can't let it go it's blind, but the banks know, okay, we can't let it get out of control. Could you imagine if the banks that were holding these auctions for the government didn't bid? What would it get filled at? I have no idea. Would it be 5.5? Heck, could it be 6? Right? We don't know, do we, Jason?
No, I mean, I guess if I was trying to get myself a good rate of return, there's no reason not to bid 6% because you never know if it's gonna work. So I think that there's a lot more of that going on. I think a lot of the investors are taking a stab at that, and that's probably what's raising all those rates, Joe. And we'll see. I still think this stuff cools off for a little while before it inflames back up later. So we'll see if it's not going to be a soft landing. It's just going to be a reprieve. It's going to be a timeout. It's going to be a halftime, right? And then the third quarter starts.
But it's not halftime. See, the markets want to pretend it's halftime. Right? They want to pretend it's halftime. It's not halftime. The government's got to sell this debt every week. It doesn't end.
Right.
It really won't matter. But I'm going to tell you what people that have been doing this their whole lives. Ray Dalio was on TV this morning on CNBC. I'm going to tell you what he had to say about what the problem is right now facing this country. That's coming up next. (800-951-0592) Patriot Radio News Hour. Joe and Jason on this Friday. And Jason, I think this is going to be really easy. You know what? The guys that I like, guys like Ray Dalio, Jeff Gunlad, Stan Druckenmiller, you know why I like them? Because they just speak very plainly. It's not complicated. Because people want you to believe it's complicated. They make it complicated. But Ray Dalio really laid out what the issue is. Because I keep saying, gosh, something's not right. Keep looking at these banks. Why are these banks every week borrowing more money through the emergency lending program? I mean, that's supposed to be coming to an end in May. Actually, maybe April. Got to remember, it's either April or May. And every week it's a record. Every week, money flows out of into money markets. Why are they going into money markets? Well, they don't want it in the bank. They think that's going to save them. It won't. But here's Ray Dalio. Economically strong means financially strong. Pretty simple. Financially strong, what does that mean? Do you earn more than you spend? Do you have a good income statement as a country? Do we have a good balance sheet? And then he lays out all the data, and he goes, you know the debt numbers. And then he says, we're in a recipe for trouble. The worse that it gets, the more we're going to have long-term problems. You can see it in the numbers. It's just a matter of numbers. In other words, it's not complicated. It's just math. And not complicated math. This is the part that got worried. We are near that inflection point. What is he talking about? Right? We always knew that at some point the debt would be so big, the interest payments would become so large, the amount that we would have to roll over on a daily basis would be so great that we would have trouble selling it. Now, right now, we're getting a warning. But Ray Dalio says the inflection point, it's close. It's a lot closer than people think. And then he went on to say that foreigners continue to dump U.S. treasuries. So far this year, they have dumped over $250 billion, over $250 billion, that they said, you know what, nah, we're not rolling that over. Just give us our money, and we're going to turn around, and we know what they're doing, right? We know where it's going, right? They're buying gold with it. He talked about China, who's dumped 17% of their treasury holdings this year alone. By the way, now Japan's following suit. Remember when this week, what was it, Tuesday, when they passed those continuing resolutions, things got really weird after that. That CPI, the 1/10 miss on CPI, and Congress decided, let's just keep spending at the same rate we're spending. Ray Dalio, we want to keep spending at the same level. There is a need to get more and more into debt. Here's how it works, folks. It accelerates. We are at that point of acceleration. In other words, every day they go to the auction, they need to sell more. We need to sell more, yet less people want to buy it. That's a problem. And Ray Dalio says that at this point of acceleration, it creates a supply and demand problem. Oh, I love it when we get back to basics. Economics 101. Supply, demand. This is something all of you can understand. Right now, the supply has never been greater. Unfortunately, the demand, right, Jason? The demand has never been less. It's made worse by other issues. Talking about political issues, internal social conflict issues, war issues. And Jason, I think that really kind of sums up what's really happening right now. And we're not at the inflection point yet, but as we get closer, this is going to continue. And how much it costs. And this is why when you hear the central bank say, listen, we may be done raising rates. We're not cutting them. I think the problem is simple, Jason. The only way they can really cut them, it's a crash. Without a crash, they've got to leave them here just to have enough people to show up to buy the debt. Right? And now, if everything crashes, right, Wall Street starts losing 5 and 10% every single month, right, people will be pulling money out of Wall Street. They'll take 4% on a treasury just to get out of the Wall Street carnage. But without that, we got a problem.
Yeah, and Ray Dalio is calling for a depression to be coming on. He doesn't speak recession. He's been speaking that a depression. He's real big on the business cycle, the 80-year cycle, the 20-year cycle. He looks at all that stuff, and he's calling for a depression that's economically could be much more severe than even the Great Depression, Joe. So he's seeing very, very gray clouds coming, Joe, for sure.
Well, and think about it. Why would he think that? Well, the yield curve, once we get to January, will be the longest inverted yield curve ever. By the way, what were the top two? The top two was the financial crisis. That was second. The Great Depression was number one. We've already gone inverted longer than the financial crisis, and like I said, when we get to January, we'll have taken out the Great Depression. And I think Ray Dalio said, it's just, like he said, listen, what I always say, it's just math. It's not complicated. It's just math. We want to sell a lot more than what people want to buy. It's just that simple. Patriot Radio News Hour. Jason and I will be right back. 800-951-0592. Today, silver quarters, rolls of 40 silver quarters, $10 face value, 7.15 ounces of silver. On sale today, you're going to save $10 a roll, $200 on rolls of silver quarters. If you wanted to buy a bag of silver quarters, a full treasury bag, you know, when they made these the quarters and the dimes back in the day, you know, they put them in like the old Wild West movies, the Stagecoach, right? They'd have them in these burlap bags, and there'd be $1,000 face value in them. $1,000. That'd be 4,000 quarters, right? 4,000 quarters, which if you roll them up in $10 increments, right? That would be 100 rolls of 40 silver quarters, 4,000 silver quarters in a full bag. A full bag, $20,000. If you want them by the roll, $200 at 800-951-0592. You know, we kind of look at silver. Silver's like everybody and their mother, us included. When's the big run coming in silver? And it's just a matter of time. You know, really think about what silver's done in the last, say 2.5, 3 years. It's up 50%. Really? I mean, at $24, I mean, silver was like $16 before COVID, right? Now it's 24. I mean, it's coming, right, Jason? But it takes a little time. But it's one of those things where if Ray Dalio's right, I don't know if he is. He's been pretty good at what he does. Been doing it a long time. And this is the start here. I mean, the retailers have all been saying it, every one of them. Things have slowed. We'll see. I don't know. Can we? There's no way we can, in good economic times, go $2.5 trillion into debt, which is what I think is going to be if we don't go into a recession, depression. Jason, but can you imagine? We go into a major recession. What are we talking about? $3, maybe $4 trillion of debt in a single year? The math just doesn't work. The bank's balance sheets, they haven't been this fragile going back to the financial crisis. Remember, they thought, we fixed the problem with the financial crisis. Jason, they haven't fixed anything, have they?
No, I don't think they were maybe even trying to fix things. They're trying to set up what's going on now. I mean, technologically, they can't have what they're wanting to have done with digital currencies and things of that nature. They weren't physically able to do it. But you know, it's interesting how Bitcoin came out in January 2009. It's always interesting to point that out, that technologically these things were being thirsted for, and they didn't fix anything. I don't think they really wanted to fix anything. Joe, if they fixed everything, then we'd have a money system that actually protected the citizens and would actually be fair. You can't have that if you're rotting away at the freedoms and liberties of people and taxing their time and efforts into your own pockets. Can't. So will they fix what's going on here? Of course they're not going to fix it in the near future. They're going to make it even more that they're going to tilt that pool table even more in their advantage, right? That's what's going to happen. And this is why you got to do listen to this show and do what we talk about, which is get as much of your assets out of this fixed game as you possibly can. You know, the best way to play a fixed game is not to play, right, Joe?
Right, that's right. That really is the best way, right? I'm not involved in any of that. And it's interesting because as we watch what's happening now, right? We saw, again, right? We saw the Dow go, just below 33,000, got to 35,000. We're kind of stuck in this range. That somehow, I mean, we're on the precipice, right? Japan having huge issues, and then seemingly overnight, it's like, oh, it's gone now. It all went away. Didn't go away. It's actually getting ready to get worse. Why is it going to get worse? Well, the supply keeps coming. And think about this. Every time an auction comes, outside of the real short stuff, 3 months, 6 months, even 2 years ago, rates were lower. 3 years ago, 5 years ago, 7 years ago, 10 years ago, 20 years ago. All of that debt rolls off that we paid next to nothing on. Not only do we got to roll that over, then we got to add to it. And we're adding to it at, somewhere between, let's say, 4.5% and 5%. Well, a bill just ended, we paid 0.5% on. Right. The problem is that it just got 4% worse on this $40 billion. And tomorrow it got 4% worse on this $80 billion. And the next day got 4% worse on this $90 billion. And 4% worse on the... And this is what Ray Dalio is talking about every day. The problem just grows and grows and grows and grows. And now the government has decided, well, let's just keep spending. And Jason, this is a recipe, like you said. I think this is well-intended, right? Well-intended, because at the end of this, the banks, especially the central bank, they think if they can just have total control, then somehow their system would work. Yeah, well, it will work for about 1% of the population. 800-951-0592. Jason and I wrapping up the week, coming up next. Hey, some good news to end the week. It looks like General Motors narrowly got the contracts passed. I believe the same has happened at Stellantis. So it looks like the auto strikes, at least for now, are over. Speaking of General Motors, Cadillac says that they're going to be selling their all-electric version of the Escalade. That's their nice SUV. The entry price, this is the starting price, $130,000. So it's official, Jason. Cadillac, as long as I don't get too many upgrades, you can now buy a Cadillac Escalade for more than the first house my wife and I bought in 2000. So we've arrived at a car now is what a house used to be. But don't worry, General Motors is saying in 2025 we're going to have what they're saying an entry level compact. They're calling it a crossover. So almost an SUV, not quite an SUV. It's really a car with an SUV body style on it, but
a modern station wagon.
Yeah, there you go. The modern station wagon. Well put. It's going to start off at $60,000. Well, $59,000 in change. And again, that's the base model. So don't worry. You'll be able to get something a little cheaper come 2025. When did this happen? I mean, it's absolute insanity. Now we're talking about the base model cars are $60,000. And by law, you wanted power windows and AC and this and that, and out the, tax, title, license, out the door. You're going to spend $80,000. And if you want the fancy car, heck, you can probably get an Escalade for close to $200,000. I mean, you can almost buy two houses. Yeah, don't worry. Somehow that math works. Does that math work for you? Does it? Does that seem real? But this is what's happening. And they talk, oh, don't worry, inflation went away and all this other stuff. Listen, what's going to happen? Well, you're going to sell this $60,000 vehicle entry level for $58,000, right? Is that what we're going to talk about? I mean, before this, they used to be like 30 grand, 25, 30 grand. I mean, they've doubled. Problem is, I think they may double again before it's all said and done. Silver quarters, the way to go, the cheapest way to buy government hallmarked silver today, right here at Patriot. Rolls of 40 silver quarters, $200 if you want a whole bag of them. That's 100 rolls, $20,000 at 800-951-0592. Don't forget, this show's on YouTube. It's on Rumble. Just Google Patriot Trading. You can follow us there. Like it, comment on it, do all that. Share it with your buddies.